Afternoon, Williza. How are you?
Yeah, well, how are you, Chris?
Good, thank you.
Good.
So here we are, a month later.
Mm-hmm.
What's been going on?
Yes,
market-wise?
yes, that's right.
What's been happening?
Well, I guess performance has been outstanding, really. Like, the markets are at all-time highs, but, you know,
If you read the newspapers, you wouldn't think that.
well, no, I guess they're only focusing, day to day,
Yeah,
but
correct.
when you actually zoom out of the chart and you look, left to right over a longer period of time.
Yeah, it's phenomenal, isn't it? It's amazing. I think I've been having a few conversations with clients recently about, are we getting to a point where we're at the end of the run, sort of thing.
Mm-hmm.
So, who knows? But yeah, it's good for those who've been invested.
Most definitely,
Yeah.
yes.
And our friend, our erratic friend on the other side of the ocean, he's been changing his tariffs around.
He's been busy, yes. Yes.
Where are we sitting at the moment?
So on the 12th of August, President Trump signed an executive order to have a tariff truce, essentially between Beijing and Washington,
12th of August.
to extend it by...
Today?
No, it's the 18th today.
Yeah, right. Well, that's...
To extend it for another 90 days.
90 days, okay.
Yes.
So we've got August, September, October. Does that get us to November? Does it? Okay.
So,
is that right? August, September, October? Yeah, November.
Yep. I guess it makes you question, is it ever going to happen?
Yeah, well, that's a really good question. Yeah. So, and markets have kind of taken that in their stride and haven't really batted an eyelid because I guess it's a pause of the trade war, I suppose. So,
so that's a to be continued.
Yeah.
Essentially.
As with everything, really, isn't it? It's kind of seems a bit crazy, but anyway, that's his negotiation tactics. Anything else been happening?
Well, the RBA cut interest rates last week in Australia.
Yeah, definitely.
So they cut them by 25 basis points down to 3.6%. So we've got inflation sitting at 2.1%, which is within that 2 to 3% target.
It is, which is nice. All the homeowners out there will be thankful.
Well, I guess it's good news for mortgage holders and businesses, but on the other hand, it's not so good news if you're a saver.
Yeah, correct. Yeah, absolutely. Yeah, well, like you've had a Goldilocks period really over the last sort of 3 years or so as a saver. So yeah, I can't imagine that it's going to get better anytime soon. But probably good for those looking for a house. Maybe actually no. Well, no, maybe not so good. I was thinking in terms of being able to borrow more, but then that means potentially
it's a
quite
catch-22.
So,
yeah.
Yeah, correct.
Yeah.
Yep. So I think in the conversations, I don't know about you in terms of the clients you've been chatting to, but for me, lots of them, I guess, with kids who are looking to sort of set them up, there's a bit more urgency in moving, really, because it seems like everyone's out there buying. Yep.
Yes.
Yep. So there you go. So that's a prediction that we don't normally like making, but yeah, it seems to be that's the case.
I know, and everyone always says, it's a bubble, it's a property bubble, but maybe that's just the price.
It's interesting, isn't
it?
It's an interesting discussion you bring up because I guess I have a view on this that here in Australia there's a really strong culture of property purchase.
There is, and of course that's a result of government policy and the way the tax system's been set up as well.
Yeah, correct.
And the way we've also been brought up.
Yeah.
Number one, buy a house.
Yep.
That's most important.
Yep. Yeah. Interesting. So I guess the potential view there is that it's not a good time to buy. Not that I want to put those words in your mouth, but yeah.
I don't know if there's ever a good time to buy, but I think when you're ready, you're ready.
Yeah, go for it.
Yeah.
Interesting. It's just thinking about you're talking about government policy because tax reform's also on the table, and I think one of the big pieces in there is like there always is around negative gearing, and I've been reading articles about removing the tax-free status of the principal home as part of it, and then other. It's like capital gains tax discount that people get for selling investment properties. There's someone mooted, I'm not sure if it was the unions, that maybe you only get that for one property rather than necessarily, I guess they're trying to target people who are holding property portfolios, so that you don't get the tax benefits.
So are they looking at that just in the box of property, or will that flow onto other assets as well?
Oh, good question, Lisa. Not sure. Yeah, so I think it's all up for discussion as part of government's tax reform. So I really feel like it's a bit of a watch this space because it could go anywhere. But I feel like negative gearing might be a bridge too far politically, because I just feel, again, coming back to our culture and the number of people who have properties.
I think it's not only that. I came across a podcast recently, and he was talking about. You can look it up online. I think it's called the pecuniary interest of the politicians in this country.
Yep.
And basically, all of the politicians own investment property.
Yeah, right. There you go.
So he was of the view
It's not going to change.
it's not in their interest. Why will they change it?
Yeah, correct. Well, that's unfortunately the society we live in, isn't it? Where we all look after ourselves in some degree. So, well, there's the cynic in you, Williza. They're all standing there saying, "I'm standing for my constituents." Maybe they're not. Yeah, right. So, well, there's a fair bit going on, really, around the world. US inflation has gone up.
Yes. So the Fed is due to meet next month, but I think they've got a big decision to make because for them, I think they've got to decide what's the bigger problem for the economy right now. Is it weaker hiring or is it inflation?
Yeah, it's really problematic. And then you've got a president who's out there going,
I'm going to put a tariff on you, and you, and
Yep.
tariffs are essentially inflationary.
correct.
So you've got some
You would see it that way, but sure, yeah.
you've got some Fed officials on one side thinking it's just going to be a once-up bump in the price.
Yep.
But then you've got other members on the other side thinking, it could lead to a longer-term
Yeah.
outcome because if you're going to cause manufacturers to move back to the US and you're shifting from lower-cost locations to higher-cost, places like the US, that's more than just a one-time shift.
Correct. What this is demonstrating to me, Williza, is that you have a good fundamental understanding of economics, where I feel like the President of the United States doesn't. What would he say to that? It's like, yeah. So, yeah, it seems counterintuitive, really, doesn't it? It's like, the thing that I think about in all of this is you're right to say that they're between a rock and a hard place, but then you've also got President Trump running around saying, the guy who's running the Fed has no idea what he's doing and rates need to be lower, so borrowing costs are lower. And, without any, worry or thought about what that might actually mean for inflationary pressure in the US. Because you get a position where, you start to cut rates and you're making things easier, and as you said, then you've got production inputs going up, so prices are going up. All of that's going to be inflationary, but I just don't know that he really cares. Yeah, so
I'm just glad I'm not in that job.
yeah, absolutely. Well, the other thing is also we've got the election of a new Fed chairman next year, so it's really the current Fed chairman is basically just sitting there saying, all right, well, I've really only got to weather the next sort of really 6 to 9 months, and then I can jettison out of here, and it's the next person in the hot seat. And I guess depending on the news agencies that you read, are you going to get someone who's, I guess, more politically aligned in the seat? What does that look like? So, again, a lot to navigate, essentially, because all of this ultimately flows through into asset prices, right?
Correct.
Yep.
Correct.
So your discussion before about portfolio returns have been really strong. And it's, we'll see where we go from here.
Like we always like to tell our clients, it's time in the market,
Correct.
not trying to time the market.
Correct. Well, had you tried to time the market, which I've had some clients try and do, exited around election time, and look at what's happened since then. And the hard part, as we always say, is like if you're getting out, like even if you time the out, you've got to time the re-entry, and I think that's sometimes that's almost harder. Like, yeah, it's although I don't know, have you been following Warren Buffett recently?
No, I haven't. What's going on?
So he has cashed out a significant amount of his assets out of the market, which typically what do they call it? The Warren Buffett index, I think. So it's just basically, well, if he's out, maybe he knows something.
He knows
that
something,
the rest
yes.
of us don't. So it's interesting. I'm not sure if it's at an all-time high, but it's definitely over the last few years. He's got his most out of the market.
Mm-hmm.
So some people are saying that's a signal for things are now's the time to exit. But yeah, as you said, the hard part is always to know like
When to
do
go
you
back in.
Get back in.
Yeah, when's the lowest point?
Yeah, correct. Nobody knows. So yeah, very interesting. We have our monthly market pack that we normally sort of walk through with us, which we'll release out to everyone who happens to be watching this. If it's in, it'll be in the show notes in YouTube or on the podcast if you're listening in the podcast. But to be honest with you, we were both kind of flipping through this before we started. There's nothing too huge in there. I think other than maybe just the inflation in the US numbers. Was there anything?
We'll know more next month.
Yeah, correct. Was there anything else that you really wanted to address?
No, I think that captures the main things I would want to know personally as an investor.
Yeah, me too. So all of the data for those who are looking for it is in the monthly pack. But yeah, otherwise I think Williza, it's on to next month.
Yes.
Okay. Well, thanks for joining us.
Thank you.
All right, so we'll see you soon.